All right, good afternoon, everyone, and welcome to this afternoon's Cogen Europe Power and Heat Boost. Thank you for all joining. We realize there's a lot of different webinars and competing events of such nature in the COVID-19 environment. So we're very pleased that you took the time to join us for this very interesting webinar focusing on the issue of sustainable financing. Just a few housekeeping things before we get going. This webinar is being recorded for your information. It's important from a GDPR perspective. All participants join in mute mode, and I have a colleague on standby, Thomas, who will mute you if you inadvertently unmute yourself before we get to any segment. In addition, we will begin with a quick introduction myself, and then we'll have a very interesting introductory presentation from the European Commission, and then we will get to a panel discussion followed by a Q&A. Q&A will be conducted via the chat function. My colleague Francois will be supporting that. So if you have any burning questions, please write them down and insert them into the chat function. So without further ado, I should probably start by presenting myself. My name is Hans Korteweg. I'm the Managing Director at Cogen Europe. So again, a very welcome to everyone who has signed in. A few words about Cogen Europe. Obviously, we're the trade association that represents the cogeneration sector here in Europe. Cogeneration is one of the major energy efficiency solutions that we have in Europe. It saves energy, cuts carbon emissions. For example, a recent project in Germany was funded by the EIB that shows that we can cut carbon emissions by 70%. So cogeneration also reduces energy costs for users, which is key to boosting competitiveness across the board. Many of these benefits for cogeneration is promoted in many different pieces of EU legislation, such as the Energy Efficiency Directive. Cogeneration is used in all parts of the economy, households, public buildings. Even the European Commission Berlaymont building is powered by CHP. The European Parliament and some of the European Council buildings are also powered and heated by CHP. But not just, iconic buildings, but sports centers, hospitals. 70% of district heating in Europe is actually from cogeneration. SMEs use them, bakeries, breweries, you name it, and also big and energy-intensive industries. So quite many different, I would say, parts of society use cogeneration today. So why this webinar today? Well, by the end of the year, we expect the EU to adopt an EU-wide categorization or taxonomy defining which instruments are green. The aim is to accelerate, obviously, the transition to a carbon-neutral Europe by 2050. The European Commission is currently drafting a proposal to establish such a taxonomy to be published soon, fingers crossed, based on recommendations of the Technical Expert Group, or as we probably know it better, the TEG. The topic will have huge implications for banks, investors, but also industry. Investors need to be well equipped to consider not only the financial aspects, but also the environmental, the social, and economic factors to make informed choices today and tomorrow. Today, I'm pleased to have a very distinguished panel of experts who will debate what this taxonomy should look like, what are the opportunities, but also the challenges to build such a taxonomy, to make the energy system greener, to guarantee affordable financing, safeguard energy security at an acceptable cost, and maintain Europe's competitiveness. Before I introduce the panel, I'm very pleased to first introduce Zita Toka. She's a policy analyst at DG Energy, the European Commission, and she will give a keynote introduction on behalf of the European Commission on the future of the EU taxonomy file. So without further ado, Zita, please make yourself visible and unmute. And we're very much looking forward to what you have to say this afternoon. Thank you.
Thank you very much, Hans, and good afternoon, everyone. My name is Zita Choka. I work in the Energy Policy Director General of the European Commission, and I've had the honor of being able to work with a number of other services in the Commission who, for example, environment, climate, capital markets union policy, who have been invested in the past couple of months and years in defining the Commission's Sustainable Finance Initiative. In today's particular case, that would refer to the taxonomy. Before I start the topic itself, I would like to have a request. Due to the sensitivity of the process associated with today's topic, I would like to request not being quoted by my name. So for those of you who would like to use the acquired information in any material produced after the event, I'd like to be referred to as a commission official if possible. I also have the pleasure to join this virtual podium of Association of Representatives who have tirelessly investing and contributing to many topical discussions with the European Commission, concretely this time, of course, the taxonomy. And I'm also very glad to see so many participants, and thank you very much for taking the time to participate in the discussion, possibly on a topic that is very timely, in my humble opinion, very important, challenging, and includes possibly very many controversies, which honestly make this topic a very exciting item to work on. So if I take a bird's eye view of what the taxonomy sits in as a policy setting, I would highlight two main elements. One is a bit more immediate than the other. It is certainly the current economic crisis and the role of recovery. If I take the energy sector as an example, the current COVID-19 caused economic crisis has resulted in a 70% decrease in European investments in the energy sector, and that means a very sharp reduction in private sector investments. And while in general, the sector itself has shown quite some resilience to the impact of the pandemic, the crisis has uncovered the vulnerabilities of the European value chains. Now, it has become rather clear while looking at the various implications of the economic crisis that there has to be an answer that takes into consideration a rather different future. And in the Commission's policy in the recovery package, this has been confirmed as an opportunity to break with the old habits and build a more circular, sustainable, and highly competitive European economy. Importantly, this recovery that we foresee in the forthcoming period integrates very strongly a green and digital transition element. Of course, this part, and that leads me to the second very important general policy framework, is because of the already defined European Green Deal, the European growth strategy, which we believe should be the motor of the recovery, as well as the long-term ambitions for climate neutrality. Of course, as part of the Green Deal, there are several various initiatives reaching over the spectrum of the European economy. Importantly, I would highlight, due to the timeliness of it, one important ambition of the European Commission, as announced by President von der Leyen, which is the increase of the climate ambition by reducing emissions by at least 55% by 2030. The entire policy framework that taxonomy lands on is built, of course, and will build, of course, on various sectoral policies many of you are intimately familiar with, given many of you are actually stakeholders and market participants of the, I presume, energy sector, possibly transport sectors. Therefore, you know very well the ambitions and the work that we've done together over the course of the past couple of years, notably the clean energy transition, the clean mobility package, circular economy, etc. So all these European Commission or European policy, legislative or sometimes non-legislative actions set really the framing together with the European Green Deal and the long-term climate ambition that allows for a somewhat different but equally important element to give birth to, and that's primarily the transition of the financial sector. Now, why is that? That is because, of course, you very well know that the achievement of the 2030 targets, the long-term decarbonization, coupled with the current recovery attempts from the economic downturn, all have a very strong price tag. In the green recovery package, the recovery package, we've estimated the investment needs of the green and digital transition to be at around 595 billion euros per year. And delivering on the 55 ambition, if you have a look at the impact assessment, also requires enormous investment across the board, importantly in energy efficiency, transport and tertiary sectors. Of course, as far as the energy sector is concerned, also in renewables and energy system integration with networks. Now, irrespective of the concrete aggregate value at the end of projection, it is clear that financing frameworks, both public and private, must support the overall policy ambition, and we need them to also sign up to this wide-ranging transition foreseen for Europe. In the case of EU public funding, not so much the topic of today's discussion, but perhaps it's worthwhile pointing out that the EU has already tabled its next budgetary framework and the concrete programs for this framework, and dedicates 30% of the EU spending to climate action in these proposals. These are, of course, under negotiation. Many of the concrete sectoral legislative bases are already agreed on political levels. Some other ones are still open and subject to negotiation. But in a broad sense, it is confirmed that the climate ambition is increasing, especially in comparison to the current so-called climate mainstreaming target, which was around 20%. And that is what the EU can do with its own public sources to dedicate to climate action. Now, of course, public funding, especially EU public funding, has a role to play, but the bulk of investments needed to achieve the 2030 targets and then climate neutrality in the long run will, of course, have to come from the private sector. That is why the European Commission has come up with the Sustainable Finance Action Plan back in 2018, which basically sets the foundations for integrating sustainability across the financial sector and mobilizing the financial sector for the sustainability transition. The Commission's Sustainable Finance Initiative aims primarily at reorienting capital to sustainable investment, managing financial risks stemming from climate change and environmental degradation, and fosters transparency and long-term outlook for financial and economic activity. It is composed of a variety of legislative and non-legislative actions, and the taxonomy of it is its main building block. The reasons for the birth of taxonomy is actually manifold, but primarily to establish a common understanding of what should qualify as environmentally or, in the long run, socially sustainable. It creates a harmonized classification system of these environmentally sustainable activities, which ideally will help channel capital to the investment necessary for the decarbonization of the EU. It sets the taxonomy regulation itself, which has been agreed already, it's in force. It sets the framework and principles for assessing economic activities against 6 environmental objectives. And the regulation creates disclosure obligations for financial market participants with respect to their financial products, marketed as sustainable and green primarily, but also general financial products, as well as creating disclosure obligations to non-financial undertakings under financial undertakings under a non-financial reporting directive. What is important for me, at least, to highlight that this is really a first step. It is a disclosure requirement only, I should say. I normally wouldn't like to highlight that, but I understand there is a lot of misunderstanding around the purpose of the taxonomy, and oftentimes it's seen as an obligatory investment list, an attempt to define so good and bad companies, and this is certainly not the intention of the taxonomy. It is about a more transparent, more harmonized understanding of what environmentally sustainable activities would be. The regulation itself is not deterministic on defining any economic activity as environmentally sustainable. For this, technical screening criteria would have to be set up, and the Commission received an empowerment in the taxonomy regulation to adapt delegated acts which will establish these so-called technical screening criteria. Hans has already pointed at the process, but I imagine this is perhaps of interest to you. So I would just sketch out what the Commission is currently doing in establishing or preparing this delegated act. The first delegated act will focus on climate change mitigation and adaptation, and is currently under preparation and planned for adoption by the Commission by the end of 2020. When preparing the delegated acts, also, as Hans has explained, the Commission draws on the TEG's Technical Expert Group on Sustainable Finance report as a main input for defining the criteria, complemented by a proportionate impact assessment. It is the main input to the delegated act. It is not the only input, however. There's, of course, a very stringent assessment that makes sure that the TEG recommendations or alternative criteria are in line with the expectations of the taxonomy regulation, which includes very strict or defines requirements for the technical screening criteria. I've mentioned that the first delegated act focuses on mitigation and adaptation. There will be further delegated act in 2021 to lay out criteria for the other 4 environmental objectives as foreseen in the taxonomy regulation. In line with the better regulation guidelines, the Commission will publish the draft delegated act for stakeholder feedback. And then stakeholders will have an opportunity to contribute even more formally to the preparation of the document by expressing their views. These views will, of course, be taken into consideration during the final drafting of the delegated act, again, which was planned for adoption by the end of the year. On a side note, perhaps also part of the process, those of you familiar with the taxonomy regulation will know that the technical expert group no longer continues its work, but will be somehow substituted by a platform of sustainable finance, which will be set up by the Commission, and it will advise the Commission on technical screening criteria as well as usability, the review of the taxonomy regulation, and in general sustainable finance. This will be an entirely new structure. There has been a call for expression of interest. The list of members will be published in a matter of days, and the platform is expected to start its work already in October. To contribute to the increased environment and climate ambition, as well as recovery, the Commission will also present a renewed sustainable finance strategy by the end of the year. And of course, the main purpose of this is to also involve the stakeholders in defining the elements of this renewed sustainable finance strategy. So there was also a stakeholder consultation that can feed into how exactly the transition of the financial sector could be complemented by very specific steps. So to summarize, I would say the Sustainable Finance Initiative as a whole blends into the EU policies for decarbonization, delivering on the Green Deal and promoting environmental objectives by facilitating the transition of the financial sector into a more sustainable model. The taxonomy is a fundamental building block of sustainable finance, and it is a tool to promote those activities that we see necessary for Europe to reach its decarbonization objectives. It is ambitious. It promotes the end rather than the now, which is crucial for bringing about the changes necessary for a sustainable, competitive European economy. It is not quite done yet. What you see publicly is the TEG recommendations. The Commission will revise these recommendations in light of the taxonomy regulation. And the success of the taxonomy will depend largely on the implementation, which I think we're very conscious is a challenging one. I'm sure these challenges will come up during our conversation. So I think I would stop here, and thank you very much for your attention.
Thank you, Zita. Right on time, in fact. I always appreciate that. And of course, that means we have more time for the panel discussion. So with that said, I'd like to introduce each panel member. And when I mention your name, please appear and introduce yourself And in a very few words, introduce your organization and what are your priorities in terms of making the future taxonomy a success for the EU. I will begin with Sarah Detier, a policy researcher from E3G. So if you could please chime in, introduce yourself.
Hello, everyone. Can you hear me? Yeah, I think so. So I'm Sarah Detier. As you said, I'm a researcher in sustainable finance at E3G. For those of you who don't know, E3G is an independent climate change think tank working to accelerate the global transition to a low carbon future. And we do this primarily by doing strategic thinking and political analysis on climate action. But we also work on mobilizing coalitions of civil society, investor and business actors to deliver a safe climate. And we have worked on sustainable finance in Brussels for the past 5 years. We've been involved in the H-Leg, but also we have one of our senior associates, Sandrine Dixon-de-Clève, who is also part of the TEG. And in terms of our priorities for the taxonomy, there are quite a few, but I'll try to be as brief as I can. Firstly, we feel that the integrity of the taxonomy really depends on its objectivity and science-based approach. And we feel that the science-based approach shouldn't become subject to political interference. We also feel that some improvements are needed in the green taxonomy to align with climate neutrality by 2050. We also feel that the development of the green taxonomy has been prioritized, of course, under the current context with climate change. But in the future, it will be important to classify socially sustainable, but also significantly harmful activities. I'll probably touch more on that later. And we also feel that to create consistent signals across financial markets, the Commission should collaborate with countries that are developing taxonomies and identify principles for harmonization, again, while retaining a science-based approach. And we'd also like to see the taxonomy mainstreamed not only in the private sector, but also in the public sector through institutions such as public banks, but also national and local government.
Thank you, Sarah. I'm pleased to next introduce Jean-Marc Jossat, the Secretary General of Bioenergy Europe. So please introduce yourself, your organization, and a few high-level points on your thoughts on taxonomy.
Hello, good afternoon, everybody. I'm indeed representing Bioenergy Europe. We are representing the bioenergy sector with about 150 members representing the whole value chains of bioenergy. And we strongly believe that we will play a key role in the carbon neutral economy in the coming years. One reason for that is that we are the only renewable carbon source on Earth. So it means that if we have to replace the fossil carbon in our industry and other sectors, biomass is really a key solution. So this carbon will come from agriculture, from forestry, and in fact, there are all along the chain in the production of the primary feedstock, also in the industry, there are a lot of byproducts. Even post-consumer carbon will be used for bioenergy because this bio-based economy will need also energy. We need energy today. We will need for sure energy tomorrow. It means a lot of investment. And that's why we welcome really the proposal of the Commission for this taxonomy, because we have heard these billions, something like 600 billion euro per year investment. We only have one generation to reach carbon neutrality, so we should really invest in a right sector now. In terms of the future of the taxonomy, we really count on it, and we count on the fact on three, I would mention three keywords. It should be inclusive, it should happen with competent people, and it should be coherent. Inclusiveness, in my understanding, means that the stakeholders are involved, and I'm glad to hear Zita mentioning that this will really take place. it should also involve competent people for the different interest sector, which was, I'm afraid, not always the case in the past. And it should also be coherent with the existing legislation, but we will have plenty of time in the debate to discuss this. So I will stop here. Thank you. So inclusiveness, competence, and coherence is a kind of the three pillars for the future taxonomy for me. Thank you.
Thank you, Jean-Marc. Next, I'd like to introduce our next eminent guest, James Watson, the Secretary General of Eurogas. Are you there, James?
Certainly am. Thank you, Hans. Nice to see you today. Nice to see everybody. Thanks for the invitation. Eurogas is the European association representing the gas industry, particularly focusing on the markets and the downstream, so representing distribution system operators as well as key market players. In general, we really welcome and support the idea of having sustainable finance and sustainable investment initiatives because we fully support the idea of carbon neutrality and the development of all of the different types of energies that we will need to achieve that objective. Because indeed it is a very, very serious objective. And as Zita has said from the Commission, we're going to have to spend 600 billion a year to deliver that objective. So we do think it should be done in the most cost-effective way. And the way that we see it is that means that you need the right mix of energy efficiency, the right mix of renewable energy, and also the development of decarbonised and renewable gases. And we think these are the three core pillars that you need to have to make sure that you can achieve carbon neutrality. And in our view, the sustainable investment framework should definitely support the development of those three pillars specifically. And in saying that, we also recognise with COVID-19, there is a unique opportunity to rebuild things, to put money, public money as well as private money, together to build this new future. And we have to therefore be positive and look at all the different opportunities that we have. And in this respect, we think that this type of sustainable finance must send the right signals to investors. Investors must understand what are the right things to invest in. And I think that if we make sure that all of those three elements are given equal footing, so that there is indeed a comparability between renewable energies, between renewable and decarbonised gases and energy efficiency, this will be the best way for us to achieve those objectives in the most cost-effective manner. There are a number of issues, of course, that have come up through the regulation, which identify specific treatment for elements of the gas sector. And likewise, in the TEG report, then this is followed up with some contradictory positions. And we think it's very important that when delegated acts are brought forward later on this year, that there must be consistency and there must be the right view of how we need to bring forward the right sustainable investments in the gas system, in the electricity system, in the heating system, in all of the systems to make sure we get to carbon neutrality in 2050 in the most cost-effective manner. And I'll stop there, Hans. I've got plenty more points, but I'm sure we can discuss them in the panel. Thank you.
Thank you, James. Last but not least, I'm happy to introduce Nicholas Karamidis. He's the Director for EU Regulatory Affairs at Mytilineos. He's also the Vice Chair of Cogen Europe's Energy Policy Working Group. So please introduce yourself, Nick, your company, and some few high-level points on taxonomy. Are you there, Nick?
Sorry about that.
There you are.
Thank you, Hans. Missed that one, yeah. So a few words about our company then. Mytilineos is the sole vertically integrated bauxite, alumina, and aluminium producer with asset base in Europe. So we're the second largest producer of bauxite in Europe. We also own and operate roughly 1,200 megawatts of thermal capacity from gas-fired plants. Among those is a 340 megawatt high-efficiency CHP plant. We use that for the production of alumina, turning bauxite into alumina. And we are already building a new 830 megawatt CCGT with an efficiency of 63%. While at the same time we own and operate roughly 220 megawatts of RES, and we are expanding rapidly in that sector. We also build thermal and renewables capacity and storage solutions around the globe through our EPC unit. It's Sustainable Energy Solutions now. So that said, our company is fully committed to the EU's international climate objectives under the Paris Agreement. and the efforts to achieve climate neutral economy by 2050. And we've actually put out a very ambitious pledge, achieving full greening of our metallurgy business by 2030. So we actually support the need for a taxonomy of sustainable economic activities, and that must function as an incentive for investment in genuinely sustainable projects. And it shouldn't function as a blacklisting exercise. I noticed what the Commission mentioned earlier, that this is not the intention, definitely. But I'll say this, when access to financing, or at least attractive financing, is essentially blocked for non-taxonomy compliant activities or companies, this might come into question. And we've seen also a spillover effect that we're, well, already witnessing with the Just Transition Fund and the Recovery and Resilience Facility. We have references in the taxonomy in there, and that demonstrates that the taxonomy is probably going to be a rather far-reaching instrument. So the major challenge that remains is installing solid but realistic yet ambitious criteria, which will help financial institutions and investors move in the right direction. I would like to just briefly highlight 3 issues of the last TEG report, and we will elaborate during the panel debate on those. First of all, in my opinion, there's a very one-sided approach of the notion of sustainability. It's focusing exclusively on zero emissions, and we're disregarding the energy efficiency first principle, and particularly primary energy savings. And that, in my opinion, is essentially synonymous to sustainability. Secondly, some of the criteria, at least, are set looking exclusively at the end of the road. And we're ignoring sometimes the 30-year path that lies between today and the climate neutrality objective. And the third point, final one, is that the sustainable finance regulation is meant to give signals to investors. James alluded to that earlier. So it cannot ignore the global reality of markets, particularly for those sectors that are exposed to fierce international competition. And this means that the new framework should seek to put an end to the absolutely proven and documented carbon and intensive investment leakage in, for instance, the primary aluminium sector. If we set impossible standards, which change every other year, by the way, then investment signals are fully negative. And I'm talking particularly about long-term capital-intensive investment. I'll stop there now.
Thank you, Nick. I would like to ask all the panelists to turn on their cameras, in fact, but remain muted. And whilst you do that, I just would like to remind all the panelists, or not panelists, excuse me, participants that this is your opportunity to ask questions. We have the chat function, so please write down your questions there. My colleague Francois will relay the questions to the panelists. If you're a little shy at the beginning, that's okay. We have more than enough questions prepared in advance to keep the panelists busy whilst your creative mind sort of cooks away. So what I'd like to do is maybe just to kick things off for the panelists. I'll start with my first question. Do you think that just defining what is environmentally sustainable will be sufficient to transition towards carbon neutrality? Maybe this is a good question for Sarah, Zita, and maybe Nick. Others can chime in as well.
Yeah, can you hear me now? Yeah.
Yep.
So at ATG, we definitely feel that simply defining environmentally sustainable activities will not be sufficient, of course. We feel that it will be very important to support companies and investors in the transition by using the regulatory framework to set appropriate incentives and expectations on companies and investors. So I'll give a few examples of those. I think one of the keys to making sustainable finance a success will be to get investee companies to change their business models through adequate incentives. So that needs to be done through a combination of effective investor engagement, but also adequate pricing of environmental externalities, such as a credible price for CO2 emissions, and of course, addressing the risks of carbon leakage for industry through, for example, border carbon adjustments, etc. And firms should also be expected to create science-based climate transition plans and disclose progress against those annually. In terms of financial incentives, there are also new instruments that have come up, such as sustainability-linked bonds that provide access to finance based on the company's improvement of certain KPIs, which could incentivize sustainable investments. And I would say I sort of disagree with the opinion that the taxonomy might block access to finance, because it's really looking at specific economic activities rather than a company as a whole. So I think really relying on such instruments such as sustainability-linked bonds could really overcome that principle. Now, another key factor to address is also expectations on asset owners. So they should also be required to disclose how far the investment portfolios align with the long-term climate goals, as well as the SDGs. And they should be required to apply the CFD framework and climate risk scenarios. Now, another big issue that has been cited many times when I talk to investors is that it's very critical for the Commission and the ESA to ensure more timely delivery of the technical rules for investor disclosures under the disclosure regulation, but also for corporate disclosures. So in terms of investor disclosures, for example, the proposed regulatory technical standards, which contain a list of metrics to disclose against, have already been defined, but of course that was defined before the taxonomy. So there seems to be a mismatch in the timing of different regulations. So many people have already mentioned that the need for more consistency in legislation and regulation. That's also the case for the for the finance sector. And lastly, I would say that another key factor is the fact that the market needs more reliable, complete, and comparable data to let investors make more informed decisions. But again, with the review of the NFRD, that should hopefully be improved in the next few years.
Thank you, Sarah. Maybe any of the other panelists, Nick, Zita?
Sure. I think I agree with a lot of things Sarah has just said, and I think it's of course putting in place the taxonomy itself will certainly not be enough to bring about the transition in a brief sentence, but it is a step forward. And when I said that there are clearly some challenges to come across, there are some very, very technical challenges, let alone the industrial implications. But these challenges really touch upon by what Sarah also said regarding the availability of data, rather complex assessments that will have to be adapted to the requirements of disclosures in the taxonomy and disclosures regulations. And these will, of course, require quite some effort from market players, now specifically thinking about the financial market participants, but also at the end with their interactions with the real market participants. So that is why the Commission has left about a year of implementation period for the taxonomy-based reporting to come into place. This doesn't mean that I think all challenges would be completely eliminated or tackled by the end of that period, but indeed, purely concerning the implementation of the taxonomy, there will be some efforts needed from market participants to allow for a smoother communication or the transparency that the taxonomy is meant to provide. Going beyond, of course, there is the whole initiative of the renewed sustainable finance strategy, which should integrate a number of elements which you have also previously flagged. So not only putting the taxonomy in place, but making sure that the taxonomy is applied across the various initiatives, be that under the disclosures, under a possible definition of European green bond standard, and making sure with the comprehensive approach that the financial sector is moving towards sustainable considerations, integrating ESG, making sure that we move from short-termism to long-termism in the thinking, rather substantial changes in the way the financial sector in general is thinking.
Thank you. If there's anyone else like to chime in this question, if not, I have plenty more. I see that we have a question already in the chat function, so before continuing, maybe we will take that from the audience. do you see the proposed TEG recommendation as providing a proper basis to allow a smooth energy transition? What do you think of the criticism that it treats renewable technologies unevenly and misses to recognize the potentials and contribution of all CO2-free energy generation? If anyone wants to jump on that.
I'd be glad to take this question. Well, I think the key word is transition here. I think this is actually missing from the taxonomy, the TEG report, basically. What we're missing out on is technologies that will take us down this road. And I'm not talking about the usual notion of low-hanging fruit, but still, I mean, we've achieved efficiencies, really high levels of efficiency following intense R&D over the past years in fields like power production or combined heat and power production. And that part of the chain, which is a really key enabler, not just in order to take us to the next level, but to reduce emissions very, very efficiently, is essentially blocked out of this discussion. So I think that the focus that has been given on renewables, which actually expands to other sectors, and I'm going to talk about this later because we see it in our sector, for instance, where there is a threshold of 100 kilograms of CO2 per megawatt hour per kilowatt hour of consumed electricity for the aluminium smelters, the primary aluminium smelters, for them to be considered sustainable. And that's just one of the criteria that we need to cumulatively fill. So this threshold apparently ignores the reality of the entire 10-year, 15-year, 30-year process in between. For the time being, we have an arsenal of carbon leakage measures in the EU that, if applied well, and we recently saw the revision of the ETS guidelines, they're in the right direction, if I may point out, that offer crucial protection. But that does not necessarily cover the additional costs that moving towards sustainable investment entails. And particularly for companies competing globally, this is a key aspect that needs to be treated. So I think that in response to our question, I think we need to look at it from a broader perspective rather than just focus on the understanding that RES is sustainable, so let's go exclusively for RES.
Thank you, Nick.
If I might just add a little point, I think we fully agree with what Nick's just said, but there is a sort of prejudice as well, which is clear in the way that the TEG is treating the different networks, in the sort of assumption that everything on the electricity side is sustainable, and where on the gas that's not necessarily the case. This is no made clearer than when you're actually talking about extensions of the grid, because the regulation is very clear that you can extend the grid where you're actually building to enable decarbonisation. So imagining connecting electrolyzers or anaerobic or CCS to the grid, this would be considered okay. The TEG doesn't accept that. And so for me, it contradicts what the regulation was saying, and in a way has a very strong prejudice against the renewable and decarbonised gas part of the solutions that we need for carbon neutrality. And so this kind of prejudice that comes through is very, I think it's not the right thing that we need to be sending the right message to investors. Investors need to know that they need to invest in all of the vectors because we need them. And I think this is the sort of area where you definitely think that there needs to be something done to either go back to what was in the regulation or to balance out what the TEG have put forward. Thank you.
Thank you, James. Good point.
Jean, speaking, if I could add also something, because with the TEG, in the chat we are touching a kind of a sensible topic, and I was glad to hear from Zita that the TEG is not the only input for the delegated acts. Hopefully, because there are also some criteria for Banerjee that we have difficulties with. And I will also jump on the comment by Nick with this 100-gram CO2 emissions per kilowatt hour, which seems to be a kind of harmonized political number, but that is different. That is ignoring the methodology defined in the RED II just a few months ago with all the EU institutions. And it doesn't match. So for the moment, we can hardly imagine that we will have a methodology with the RED II, another methodology for the sustainable finance, and maybe a third one with the European Investment Bank that has a third type of threshold. So please harmonize this and make it coherent with among the different EU legislations. Thank you.
Thank you, Jean-Marc. I don't know whether the European Commission would like to chime in on some of these comments, or we can move on, Zita.
I can comment on those. I think there's a bit of background noise. Not anymore. I think that the colleagues have made some very relevant comments. I am not entirely sure whether my reading of the TEG's report is the same as some of the opinions that I've just heard now. It is not my role, of course, to even try to defend any of the TEG report content. It is an independent report. However, I think it is true, and that is part of the way we've thought about technology neutrality in the taxonomy regulation, that this exercise should not be about cherry picking the winners. It should allow for a level playing field for all those activities that contribute to climate change mitigation or climate change adaptation. In the case of mitigation, this would be in, of course, greenhouse gas emission reduction terms. And I think the intention of the TEG was that indeed it should allow for all electricity generation technologies to meet the threshold. There is no upfront exclusion except for solid fossil fuels, which made its way into the taxonomy regulation. But as long as an electricity generation technology can meet the TEG proposed threshold, it can qualify as environmentally sustainable, subject, of course, to meeting the do no significant harm criteria. I do have otherwise sympathy and understanding of some of the other criticism on the treatments of various other activities. In a way, I think this can be, to an extent, a bit improved by perhaps a closer reading of the text. In terms of harmonization across the various existing methodologies or targets enshrined in legislation or elsewhere, I think it's difficult to disagree that, to the extent possible, we indeed should create a consistent framework that indeed allows for the transition to take place with sufficient investment into all those areas where we actually need those investments to take place and take place relatively quickly. More specifically, I wouldn't go into so much of the details due to the obvious sensitivity of the processes, but legislative consistency is a requirement of the taxonomy regulation, together with a number of other. Therefore, when assessing the technical expert group recommendations, the Commission is, of course, screening through the various, especially those legislations that are designed to contribute to the achievement of, or enabling the achievement of the 2030 or even in the long run decarbonization objectives. So I do agree with Jean-Marc to a large extent on the necessity to make the framework as simple as possible. At least in the energy legislation, even though it's very complicated, this is what at least the European Commission has been trying to do for the past years: create a legislative environment when investors and companies are confident in making their choices in, be that investment into construction or operation of various assets. And this line of thinking has been, of course, continued with the Green Deal that promotes this transparency and predictability. And I do also, on a personal level, agree that the same level of consistency and predictability of the framework should also be replicated when we touch financial legislation.
Thank you, Zita. I'll move on to my next question. We alluded to a few times, at least into the introductory remarks of some of the panelists, and it's linking to the banking sector, and in particular the private banking sector. So should private banks be more limited in their consideration of what constitutes sustainable energy investment than public banks, for example? The panelists, James, would you like to chime in?
Yeah, sure. I mean, I think this is exactly in a way what Zita's just been saying. There needs to be this consistency. There needs to be consistency, not just between the legislation that we have, like the Renewable Energy Directive and the Sustainable Finance. You also need to have consistency between public lending rules, which you see in the EIB, and private lending rules, which are being framed here. And I think that's, somewhere where we can see that the EIB have different thresholds. They have different ideas about what constitutes sustainability in the coming 10 years. And so I think in this respect, it's very important that whatever comes out here in the Delegated Act is fully in alignment with the EIB. The European Investment Bank is called the world's leading green bank and has been very, very much widely hailed for its new set of lending criteria. And yet what we see in Eurogas is that the criteria that would be applied for certain investments, notably in relation to certain gas or CCS activity, or rather I should say CCU activities, are much more stringent. So private banks won't be able to invest in the same things that public authorities and public banks can and consider it sustainable. So from this point of view, yes, let's have consistency between legislation, but let's also have consistency between public and private lending and not undo the good work of the EIB by not being able to find the match financing that you need in the private sector. So yeah, I think there's a bit of work still to be done in relation to that. And if you want an example, there's a good one. Basically in the EIB, any pipe that is used for CCU, for carbon capture and usage, would be considered sustainable, whereas the recommendations of the TEG are that a pipe that is solely dedicated to shipping carbon dioxide for CCU, for use in industry, for example, would not be considered sustainable, which I think is kind of slightly perverse. But there are a number of other elements that we could go into, and I think it's just important that consistency is applied through banks that are private, that are public, through legislation that exists with this new taxonomy. And if there is consistency, we give a much better signal to investors so that they do invest in the right things. Thank you.
Thank you, James. Any of the other panelists? Sarah, would you like to chime in on this?
Yeah. Can you hear me? So, yeah, I agree with you. I would say that the participation of the public and private sector, of both sectors, is necessary to achieve climate neutrality. But I'd perhaps go back to the consultation on the renewed sustainable finance strategy. It was quite clear that the Commission assessed whether the taxonomy should be used by public banks when crowding in private finance, but also by the rest of the public sector, for example, for greening expenditures or for greening public procurement, and by member states through the future EU Green Bond Standard. So it's definitely true that it should be applicable to the public sector, but it also expands beyond just public banks. So now coming back to the EIB in particular, so I think what we're referring to here is the energy lending policy decision that allows projects emitting less than 250 grams to receive funding from the EIB. However, I would say that was obviously decided before the decisions on the taxonomy, and there's actually an upcoming review of the energy lending policy. So that's a midterm review in 2022. And they have indicated that this topic will be considered further to discuss the implications of the taxonomy and the EU Green Deal more generally. Now, so E3G is actually quite heavily involved with public banks in Europe. So I thought I would perhaps give some more information on the work that we're doing. But there is an upcoming Financing Common Summit taking place on the 10th to 12th of November. And that will be the first ever global meeting for all public development banks to stress action on the SDGs and climate change. And the draft document that the banks have produced actually indicates the need for aligning with the Paris Agreement, but also stress the need for a definition of a common framework, taxonomies, labels, etc., to characterize what is aligned with long-term climate goals. So we're more in the view that the European institutions such as the Commission, but also member states, should really work to support the immersion of a strong joint declaration from public banks at this summit that is aligned with the taxonomy. And of course, we don't want all the banks in different countries to disclose against different taxonomies. But I think there's a key role here for the Commission to play this support role for harmonization, and also to get member states to engage, because of course, some more progressive countries might already be engaged in this dialogue. I don't know how far the conversation is in Central and Eastern Europe, for example, in terms of their own public banks. So I think the question is not just looking at the EIB, but we should also look at over the entire European public bank system, how can we really mainstream the taxonomy?
Thank you, Sarah. Zita, we have a few questions on the chat function for you. I don't know if you had an opportunity to see them. I can read them out, or you can read them yourselves. So regarding the sustainable finance platform, will it have an influence on the criteria suggested to be included in the first delegated act to be published by the end of the year? And when will there be a second chance to add possible sector activities after the adoption of the first delegated act?
Okay, this question goes much into the details on how the platform will function. So I said the platform sustainable finance is foreseen already by the taxonomy regulation. We expect them to have the work started already in October. I would not like to speculate on the second chance of possible activities after adoption in the first delegated act. I think it's clear that the first delegated act not and cannot encompass all activities across all sectors of the economy. The most burning task ahead of both the TEG and now the Commission is to tackle those that have the greatest potential for reducing greenhouse gas emissions or are responsible for enormous greenhouse gas emissions, and try to tackle them in the delegated act. There is indeed a kind of dynamic nature of the taxonomy, which allows for both the review of the delegated acts as well as the extension of the list of activities and their associated criteria. That is why the taxonomy has this, we refer to it as dynamic nature. In terms of when these changes will be implemented, there isn't such a clear time frame. Specifically, the taxonomy regulation does set out the review clause of 3 or 5 years, and the work will carry out in line with the expectation of the taxonomy regulation on this one.
All right, thank you, Zita. I'll move on to some other questions. Maybe specifically for Nick, coming from an industrial perspective from Mytilineos. I mean, could you show us how or provide some illustrations how taxonomy could affect European industry, such as yourselves, manufacturers?
Sure. Well, instead of giving you a high-level understanding, I'll maybe use an example.
Perfect.
Avoiding, of course, to go into the debate of whether the delegated act will differ much from the TEG report, because what we have right now is the final TEG report. So I'm going to use that, the criteria in the TEG report, to illustrate my point. For a primary aluminum smelter, 80% of the emissions are indirect emissions. So basically, it's the emissions of the electricity grid. In Europe, it's the electricity grid, because 96% of the smelters operating in Europe are fed by the grid. They're not self-procuring electricity. So let me give you an example. If we were to, say, build a huge PV plant of 500 megawatts for our smelter, for instance, we consume roughly 3 terawatt hours of electricity, baseload electricity per year. So this would satisfy roughly 25% of our power needs. And the remaining 75% would still reflect grid emissions. Even if we did meet the very ambitious NECP targets set by Greece for 2030, we would not be able to reach the indirect threshold set by the TEG report in 2030. That's at the end of the decade. And to make matters worse, even if we were magically to build a 2 gigawatt solar PV plant right now to feed the entire needs of our smelter, still, according to the taxonomy criteria, we would not be sustainable. We would not be eligible. Why? Because direct emissions, albeit small for a very electrified sector such as the aluminium, are there, and they're going to be there. And quite frankly, from our estimates and the checks that we've made, because we participate in European aluminium in Eurometaux as well. So what I understand is that probably no smelter in Europe, in the EU, meets the direct threshold that is currently in the TEG report. So then, this is what I'm saying. It seems to me that the criteria were not set, taking into consideration the very, very various needs of sectors, particularly industrial sectors. These are not numbers. We're not just throwing numbers around. This is, in order for us to proceed with a 2 gigawatt solar panel and solar plant investment, we would need a whole lot of money. I'm not gonna give a figure, but it seems competitive right now. It doesn't seem competitive to consume that electricity right now for smelters. It's relatively impossible. But even so, we would not manage to meet the taxonomy criteria. So I think that some kind of debate on the criteria should be done. I would add that there is an aluminium stewardship initiative, the ASI threshold, that has been drafted by NGOs together with industry experts. And many of the companies operating in Europe have joined this initiative, and that sets quite ambitious targets as well. But those ambitious targets are realistic. So they do tag along with the reality of the technology of the industry. That's just about it now. I could go on, of course, and speak about our alumina refinery and the CHP plant that operates with that, but that would only make matters worse. So
I think that's a good example. I don't know whether the other panelists, Jean-Marc, any examples from your industry to illustrate the pros and cons of the existing taxonomy and looking forward as well. If not,
yeah, maybe a word if you want. Was it to me that you were asking, or?
Yes.
Okay, sorry. Yeah, in terms of ambition in the taxonomy, it depends where we put the bar, let's say. I mean, in the red 2, there was an agreement to reach 70% emission reduction for LCA CO2 emissions, which means 198 grams per kilowatt hour. In 2026, we set the bar at 80%, means 132. And taxonomy comes with 100. So you see, it's not impossible, but it means that somehow, you know, we will have the very best. We will select the very best. So it's a kind of, in terms of strategy, I think that the whole economy will have to move to a carbon neutral Europe. And of course, there will be also the first of class always, but if we are too stringent, there might be the best would be the enemy of the good somehow, if you know what I mean. So now with all the funds that are available for the recovery after COVID and so on, we should really try to have the whole economy moving towards that. but I agree with what was said before. This is much more challenging for the energy-intensive industries. For the industries working in the wood-based sector, the challenge is completely different because they have already, in the pulp and paper industry, they are already using more or less 40% of bioenergy as an energy source. In the woodworking industry, they are using 60% of wood already as an energy source. So this will be less challenging for those that are working in the bioenergy than in the wood sector already. But yeah, so that's the point. That sometimes it is claimed that that sustainable finance is just to give the kind of very high level of ambition for the green funds. But I have the impression that all the public finance at least, should go towards should be compliant with the Green Deal, not only just the top of the mountain. Thank you.
Thank you, Jean-Marc. Sarah, you wanted to say a few things as well?
Yeah.
In response?
So, yes. It was just to say that I guess in my opinion, I still think that the taxonomy is really this tool that should be science-based. And of course, for energy-intensive industries, it's much harder to transition because it's just so expensive. But I do feel that there are other mechanisms for that people can push for, such as, of course, the reform of the ETS. But there are also finance mechanisms that are just not in place in Europe at the moment, and that could support that shift. So, for example, carbon contracts for difference, but also public procurement for green products, because of course green products will be much more expensive. A lot of industry that we speak to say that there isn't a demand for their products, and that's why they can't invest in these technologies. So I really feel that beyond the taxonomy, it's also about creating these other incentives for the whole industry to shift. But the role of the taxonomy itself, it should still be to define what counts as green and what doesn't. Now, I would also say that the taxonomy sort of brings visibility to companies that have been developing solutions to strengthen the low carbon economy. And for those that haven't yet, I feel like they could use it to really seize the opportunities offered rather than seeing it as a cumbersome process. You know, you could use the taxonomy more strategically to adapt your business model, for example, expanding into new green sectors, embracing an SDG approach to transform business models. There are many companies that are doing that. And I also wanted to bring an example. We work with Acciona at E3G, and they're one of the very progressive companies. They're an infrastructure company, so perhaps their issues are not as difficult as energy-intensive industries, but they have actually checked the alignment of their CapEx and OpEx with the taxonomy, and I think it was something like 60% of revenues were actually taxonomy aligned. So it is possible to do. It's just that, of course, we don't expect anybody to be there right now. This is a process that should take years, that will take years, but the whole point of the taxonomy is to kickstart that process. Yeah, and I'll leave it there for now.
Thank you, Sarah. I'm just looking over to the chat function again, and I apologize, I did miss a question there. It's how will taxonomy take into account the residential sector, retrofit, decarbonization of heating and cooling in general? I don't know if anyone would like to tackle that. I don't want to put anyone on the spot, but maybe it's more of a technical nature. No volunteers? That's okay. That's okay. We can move on. We've talked obviously a lot about Europe and European banks, public and private. But what about the need for consistency between the EU taxonomy and other taxonomies that exist globally around the world? Obviously, companies are multinational, banks are multinational, public and private. What can be done there?
Yeah, maybe I can take that one first. we think it is important, yeah, to share our advance in Europe with other parts of the world and to have a coherent approach there. We know, for example, that ISO is working on standards for sustainable biomass. And unfortunately, they are, as far as we know, copy pasting a draft tech report. So so we are a bit nervous to see that happening because for the companies, as you mentioned, we have. For the bioenergy sector, we are number one in Europe in terms of technology. So we export already technologies around and know-how around the world. So we hope that these kind of criteria will be harmonized across the world. So this ISO thing is a bit disturbing for us.
Thank you, Jean-Marc. I don't know whether the Commission would like to respond to this. Obviously, you're not just looking at Europe, but beyond Europe's borders.
Indeed, I would not comment on the ISO remark. I also find it a bit maybe strange to see that if a draft tech report is considered, then maybe a bit more solid data could be referenced, but it's not for me to judge. In terms of the international angles, what I can give two thoughts. One was that when we started to think about taxonomy internally and then passed it over to the technical experts, we requested that they look around the existing taxonomies across the globe. I mean, there's clearly a lot of effort from various corners of the earth to have this definition, this classification system, or vocabulary, sometimes it's referred to as. And it was important to not start from ground zero, but to integrate the existing taxonomies. So in a way, in the work of the TEG, I think in one of their reports, I think they even had a comparison of the existing taxonomies and have not a comparison, but a collection of the existing taxonomies to see where the various classification systems are starting off from. The other thought I have is that indeed financial markets are global. It's very difficult to define borders from them. They simply don't exist. So also in the taxonomy, we have to have this international dimension in mind, even though this is primarily a European legislation. But of course, the financial market participants who will use the taxonomy will not necessarily be themselves, strictly speaking, European. Therefore, we must be aware of this implication that the taxonomy might be used outside of Europe, which we find as a very positive outcome of our efforts. B, try to target quite clearly the international cooperation on the topic. So, and back in 2019, the Commission has, together with a number of countries across the globe, launched the International Platform on Sustainable Finance. And the platform is growing. It facilitates an exchange between countries of concern, members who are willing to work together on sustainable finance. And there are efforts to see how the existing approaches can be coordinated at this stage. So I think this international dimension of the entire work is recognized, because it's difficult to really navigate it from one specific geographical location of the globe. But needless to say, Europe has been kind of a front runner of the efforts in decarbonization and in general reaching environmental objectives. So I believe that it remains a European interest to lead the way, continue to lead the way together with the other countries of the willing.
Thank you, Zita. We're actually coming to the end of our panel discussion. What I'd like to do now is just invite each of the panelists to wrap things up and maybe highlight one or two requests that you would like to see in the future EU taxonomy. Obviously, Zita, you don't have to answer this question, but you can certainly provide some final thoughts and conclusions. Let's start with James.
Thanks very much, Hans. Well, I'd say first of all, thanks for the good discussion today, and found it very enlightening as well, and really very helpful. I'd make one final point actually about the last question that you raised on the global impact. I had the fortune to discuss this with a couple of large American companies and a couple of large Japanese companies, and both seem very convinced that what happens here on sustainable finance will have reach into their financial markets. They use the term, of course, that the European Union is the leader in global regulation. We're great regulation exporters, so you can take that away, Zita. So they were certainly expecting that, and they were giving you a pat on the back at the same time. I mean, it has implications for the rest of the world as well, because it means that if they do take those specific levels over, it could mean that certain technologies that are being used at the moment would suddenly become less sustainable, and they may be technologies that we need. And I refer here particularly to things like natural gas and its development in places like Japan and China to displace coal, which is in a way contributing to the overall global success story of trying to defeat climate change. So I think we do have to consider the different elements. Certainly they had concerns about that, but they were also saying they expect it to come. So that's to one side. What I would say is the main takeaway that I have from today is that indeed there is a broad agreement that we do have to have strong alignment between the different pieces of legislation, between the different types of banks and the rules that they will be subjected to lending. And certainly in Eurogas, we would support that. Consistency is so important for investors. They really do need to see continuously equal types of guidelines being produced for different sectors. And I think that it is important that we do manage to achieve that. We'll make one specific point because it builds on what Jean-Marc said at the very beginning. And that is that when you look at the RED II and you look at something like biomethane, under the tag, a lot of biomethane would indeed struggle to be considered to be sustainable. And yet biomethane isn't being considered as one of the best means to eliminate methane emissions from sectors like agriculture, which are very, very high in methane emissions. And so I think we have to be very careful when we go forward, and we have to make sure that we're joined up and that we have oversight of the different legislations, the different rules that are in place. And I think it's good that Sarah was saying, talking to all the different public banks, trying to get them behind the same rules. And that's certainly something we would see in Eurogas as vital. If we're really going to get to carbon neutrality, we're going to have to do it in the most cost-effective way. The most cost-effective way doesn't pick winners. It's about making sure there's no prejudice for one vector over the other, and actually the right investments going into the right vector to deliver the right energy service that people like Nikos need at the right price. And so from my point of view, I think this is the key thing that we have to take away from this discussion today. Let's have that consistency, please. Thank you. And thanks again for the invitation. It's been a pleasure.
Thank you, James. Maybe I'll invite Sarah to give some concluding remarks and one or two takeaways that you'd like to see in the future taxonomy.
Yeah, I feel like I'm just going to repeat what I just said, but I just wanted to stress out again that the need for it to really remain science-based. And again, it should not be seen as just the one and only tool that will support the shift to a sustainable economy, and it should really be part of this toolbox, complementary and consistent toolbox to support companies and investors in their transition. And coming back to what we just talked about in terms of harmonization, at E3G, we really feel that that's extremely crucial. There are many companies that are developing their own taxonomies, but one thing to note is that some of them might be much better than the European one in certain sectors. For example, you'd expect the Chinese one to go much further in air quality, whereas you could expect, I don't know, a country with a rainforest to go further in defining biodiversity. So I think the EU could lead this harmonization process through the international platform that Zita mentioned. And that should also extend to beyond the taxonomy, to also looking at corporate disclosures, climate stress testing. So yeah, but harmonization is very key. And again, I'd like to stress the huge opportunity that the taxonomy represents in the public sector, and that we show that it should be mainstream, not only in the private sector, but also in public entities. And that, I think, will be key to ensure a green recovery from COVID. Yeah,
Thank you, Sarah. Nick, would you like to say a last few words?
Famous last words.
I didn't say famous, I said few.
Sure. Well, let me start by saying a few words on our technology, the one we share common grounds on, the CHP technology. I mean, it seems to me that the tech report hasn't done a fine job in identifying some really complex issues, particularly the CHP is a good example. We have combined heat and electricity generation, and the threshold that has been set by the tech group essentially looks at electricity generation alone. It disregards completely the bundled production process and the efficiency levels achieved by the CHP technology. So in that regard, we would really welcome any amendment done by the Sustainable Platform or even by the Commission in adopting its delegated act to a more coherent approach. We already have a threshold, which is the 10% threshold for primary energy savings when it comes to high efficiency cogeneration. So I don't know if people find it low or anything, but it's 10% savings, primary energy savings compared to best available technologies in both fields. So this in itself is very, very serious, and it's very, very aggressive, if I may say. Secondly, Sarah alluded earlier to differences between countries, and I'm going to elaborate a little bit on that, saying that the taxonomy seeks to be a horizontal approach, but quite frankly, there are differences between member states. There are differences, and in that I mean, for instance, Greece, Bulgaria, Romania, we're trying to get out of the coal era, right? Still in 2020, lignite and coal. And if we were to invest in high efficiency CHP or a gas-fired plants, then we would be immediately saving 70 or 80% of the emissions, replacing those plants by really high efficiency CCGTs and so on. So this is an effort that should not be discouraged, let's say. One final point I would like to make is the socially sustainable aspect that the Commission alluded to earlier. The impact assessment on the 2030 targets, the revised 2030 targets, does, well, make some references on that. And unfortunately, I don't know if anyone has gone through the entire document. I've seen it, and I saw that under the fragmented scenario, which is actually the scenario that we're working on, that is that our trading partners don't follow the same ambition. We're talking about a net loss of 500,000 jobs in Europe. So this is something that needs to be taken into consideration and somehow make sure that we avert this risk. Last but not least, consistency. You mentioned it earlier, and using the word consistency, not just when it comes to private and public banks, but for the entire EU legislation. I don't need to remind anyone that in July 2019, the EMR was adopted, and the EMR, the electricity market regulation, foresaw an EPS, an emission performance standard of 550 grams per kilowatt hour emissions for the participation of new built plants in capacity mechanisms. That in itself is an investment signal, if I may say. So ditching it before the year is over, which is what happened with the tech report, was not exactly boosting regulatory certainty and investor certainty. I'll stop there, and I want to thank everyone for a really, really vivid discussion, and primarily, of course, the Commission for feeding in such important and useful information, and all the co-panelists as well. Thanks.
Thank you, Nick. Well, since the Commission was mentioned, maybe Zita, I'll give you the floor for some final few remarks.
Thank you very much. And I would probably not try to answer the question what I'd like to see in the taxonomy. Don't think that's the right time to do so. But I would like to thank Coach in Europe and my co-panelists. It's been a pleasure to talk to you about your views on what the taxonomy should or could do. I think it's always fascinating. As one of you have said, perfect is the enemy of the good. I think it's one of those files where we will have to continue discussions over and over again, irrespective of what the actual delegated will say at the end of the year or thereafter. I find these conversations very, very interesting, and I take I fully agree with some of the main conclusions. I hear the request to join up our efforts to have an oversight of the various legislation. I think it is crucial that industry, that real market participants are also paying attention to these rules, and these rules are defined with the full acknowledgement of the real market participants of these evolutions. Ultimately, it is about changes on the ground that we're looking for. And I think the taxonomy would be an excellent tool to do so, and we should do our very best together to bring that about. I also fully agree, as I've said and will say so, that consistency is crucial across the relevant initiatives, legislative pieces. Relevant is quite important for me here. We cannot just bring about various numbers and want to put an equal sign across them and strive for the lowest common denominator. But I do fully agree where the place is right, where it's relevant. We do have to look for the least possible market distortion or market disruption, and send out signals that investment with an economic lifetime of 10, 15, 20, 25 plus years could actually take place. So again, I'm very grateful for both the organizers and the discussion itself, also for the questions for the audience. It's not an easy task to work on, but I'm very grateful for such insightful discussions.
Thank you, Zita. And last but not least, Jean-Marc, I haven't forgotten you. You get to say the near final words.
Yeah, short. I can only second what has been said before by the other panelists, and I thank also Kojen for this very interesting panel. It's true that it's the carbon neutrality is a huge challenge that the people on the ground have not necessarily understood in terms of how challenging it is. So on top of the sustainable finance, I think we need to really send clear signals to the market actors. And it's not again about the sustainable finance; it's also about the carbon pricing, for example, that will drive also the investment in the future. Because I mean, in the last years, we have seen still too much wrong investments, and we have just 30 years now. We cannot go on a wrong path, and if we do that, we will very soon see stranded assets in the companies. And they should have no excuse. I mean, we should tell that very, very clearly. So it means that we have to go out of this European arena and European language to explain what carbon neutrality means to the companies and to the citizens. Finally, what I get from this panel is really kind of the pillars that I mentioned in the beginning about the inclusiveness, competence, and coherency with the EU legislation. I'm a bit more comfortable than in the past after this panel that this will really happen. The discussion is much better, to be honest, than what we had with the tech activities. So yeah, we look forward to read this delegated act with great attention. So thank you all.
Thank you, Jean-Marc. And just to wrap things up, I don't want to take more of people's time this afternoon. Already an hour and a half is a lot of precious time. But I mean, just some key takeaways, which we will actually share in a more detailed summary to all the registered participants. But it's clear that consistency is key. We need to continue to drive the implementation of existing legislation. We need to drive investment towards solutions that are sustainable rather than constraining those solutions today, but also delivering on the EU's energy and climate goals tomorrow. Consistency with EU legislation. We've mentioned the EED, we mentioned RED II, but also international standards are key. Also pointing out taxonomy should be science-based, and it shouldn't be the only tool in our toolkit in terms of driving towards carbon neutrality by 2050. So those will be my last words, and I'd like to just take the last final seconds to thank our eminent panel of experts for joining us today, to talking about and sharing their views on the taxonomy and the upcoming delegated act. So thank you to you all and your insightful interventions. In particular, I'd like to thank Zita for taking the time from the European Commission to share more insight in what's being done on the taxonomy and the timeline for the delegated act and other legislative processes. So thank you again. It's very much appreciated to share your insights with all of our participants and also participating in our panel today. So just a final big thank you again to all the panelists, and I wish you all a pleasant day and hopefully a sunny weekend. But I have my doubts. Thank you again, and have a good afternoon.
Thanks a lot. Bye-bye.
Thank you.
Thank you very much.
Thanks. Bye.